ಅದರಲ್ಲಿ revenue from long-term contracts with customers. Let me take an example and explain so that you will understand in a better way. Revenue from long-term contract with which one? Customers. Let us assume A Incorporation is a construction company. It signed a long-term contract. Okay, what is the value of the work? 80 million. And the work is going to spread for about 2 to 3 years. The period of execution of work is how many years? 2 to 3 years. Now, is it possible to wait for 3 years and prepare financials after 3 years? Is it possible to wait for 3 years and start financials after 3 years? No, what to do? We have to find out the profit or loss each year. Let's assume at the end of first year, this is the position. Cost up to date. Cost up to date, we spent about 25 million. Okay. Estimated additional cost to complete the work. That is construction is, let's assume it is around 40 million. So, estimated additional contract, cost to complete the contract is how much? 40 million. Let's assume value of work done. This is certified by a competing authority. Maybe an architect has certified. The value of work done at present is, let's assume about 30 million. This is the position at the end of the first year. Let's assume this is on 31st December 2022. Now the question is, for the financial year 2022, how much of profit should be taken? That is recognized as income. Clear? Now it is a contract for 1 year or more than 1 year? More than 1 year. That's why it is called as what? Revenue from long-term contract with customers. It may take 2 years or 3 years or 5 years to complete. At the end of the first year, is it work complete? No. We spent 25 million. We have to spend additional 40 million in the future, which may be in second year or third year to complete the work. We have done the work worth how much? This is the worth of the work done. Value of the work done 30 million. For the financial year 2022, how much of profit should be taken? That is what we are going to discuss now. Income measurement and which one? So, we are going to do as per IFRS, as per GAAP, as per US GAAP. Now, there are 3 methods that are being allowed. There are 3 methods that are being allowed. Number 1, based on proportionate cost of completion. Based on which one? Proportionate cost of completion, you can recognize income. So how to do it? Let me take up an example. This example alone, because if we go with theory, you may not be able to follow. What is the cost spent up to date? Or current, we call it as current cost. What is the current cost incurred? 25 million. What is the additional cost to complete? We have to spend about 40 million. So what is the estimated total cost? 65 million. Now simple, what is the proportionate cost? Simple, we spent 25 million out of, we spend 25 million out of, what is the total?
80.
65 million. No, cost. Based on proportionate cost of completion. So our 25 million out of what? 65 million is complete. So what is the contract revenue? If the contract is complete, we will get a revenue of how much?
80.
80 million. So this will give us estimated total profit. Estimated
Total.
total profit. What is estimated total profit? 50 million. If you complete the work, you will get 15 million. You will get how much? 15 million. Now simple. How much is over? 25 million out of 65 million. This into 15 million.
Same.
Otherwise, if entire 65 million is spent, you will get a profit of 15 million. We spent only 25 million. So we can develop a formula here. Current cost divided by estimated
Total.
total cost
Into estimate.
into estimated total profit. So under this method, how the income is recognized? Current cost divided by estimated total cost into estimated total profit. So when you do that, 25 million divided by 65 million into what? 15 million. How much it will come? Do this. 25 by 65 into 15 million. This much can be recognized as income. This much will be recognized in which one? Income statement. Our revenue from contract like that in the first year, how much income will be recognized? 5.76 million will be recognized. So once again, we signed a long-term contract of for how much? 80 million, which will take about 3 years or 4 years or 5 years to complete. At the end of the first year, the position is, okay, we spend up, how much we spent? 25 million. How much we have to spend? 40 million to complete the work. We have done the work to the extent of 30 million. That is the value of the work done. How much of profit to be taken to P&L account or recognized as income? What is the first method? Based on which one? Proportionate cost of completion. What do you mean by proportionate cost of completion? Current cost by estimated total cost into estimated total profit is to recognize income. So current cost we spent 25 million, additional cost 40 million, total cost is how much? 65 million. Okay, if we complete the work as of now, what is the estimated total profit? 15 million. 80 million work is over now. Cost is 65 million. What is the profit? 15 million. So 25 million out of 65 million work is complete into 15 million. This is the income to be recognized. Or you can say profit to be recognized. Take up this first. Title is Revenue from Long-Term Contract with Customers. This is method 1. Like this, there are 2 other methods are there which we are going to see. One is proportionate cost to completion. In this number question can be asked. They can give a question like this. They can ask you based on proportionate cost to completion, how much of profit will be recognized. They can ask you a computational question. It's not conceptual. Last topic we had seen is which one? Conceptual. Conceptual means only theory area will be tested. But here, they can give a question like this. It's a past IMA question only. And they can ask you how much of profit you will charge to P&L. Simple logic. Current cost we spent 25 million out of total 65 million. So proportionately 15 million into this can be recognized in P&L. Take up this. I would have gone to the theory, but will be very difficult as a student to understand the theoretical concept of this. So let us take this example and learn this, all the other approaches also. We'll also see what will happen when there is a loss. Here there is a profit, estimated total profit. If there is a loss, what to do also we will see. This profit will be recognized in income statement. Like revenue from contract from customers, like that you will recognize. Do you understand proportionate cost of completion? Second method, you can choose any of the method, but ensure that the same method is followed throughout the year or throughout 3 years. Sir, I chose the first method. Ensure that continue with the method till the end of the completion. Second, proportionate completion of value of work. Next one is which one? Proportionate completion of which one?
Valuation.
Value of work. Simple. How to do this? This working is same. And how to work out proportionate completion? Only this part is going to be different. Simple. Current
Current cost.
value completed divided by
Total.
total contract value. This into estimated total profit. This into estimated total profit. Now, what is the current value of the work done?
30 million.
30 million.
Total 80 million.
Out of how many million? 80 million.
Into 50.
This into 15 million. So simple. 30 by 80 into 15.
Equal.
This much of profit will be recognized in income statement. Take up this. The first method was based on cost. First method was based on cost. Second method is based on the value of the work completed or value of the contract completed. This is also known as percentage completion method. It is like 30 million out of 80 million will give us the percentage.
Twenty.
37.5% of work is over. So we take 15 million into 37.5%. That will give us 5.625. It's an alternative way of looking at. $30 out of 80 is complete, 37.5% complete. So 15 million into 37.5%, we'll recognize what? 5.625 million of profit. This is the second method. Proportionate completion of value of work, otherwise known as which method? Percentage completion method. See, these are the two methods which are widely used in US. As per GAAP as well as IFRS, these are the two methods which are widely used. Third method is rarely used. We'll come to that later.
So it's equal to paper and cost. loss, contract loss.
Yeah, same. Long-term contract now, it's like construction contracts. In India, we call it as construction contracts. There, it is any type of long-term contract.
I thought AS 9 double.
11. Third, if there is a problem in recovering cash, if there is a problem in recovering cash, which means the other party is financial soundness is, I mean, the financial soundness is not there. For example, I am doing construction work for another company, or we are doing construction work for another company. The client is financially weak. He may become bankrupt. He may become bankrupt, or he may not pay the money. We have done the work, but the other party may not pay the money. We can file a case, but it will take time. It will take time. Simple. You take the same thing. You take the same thing into proportion of cash received. Into proportion of cash received, you have to consider. Okay, how much is realized in cash, that we will take it. For example, or 20 million. Cash received is 20 million. Then what will happen? What is the contract value completed? 30 million. Divided by what is the total contract value? Into what is the estimated total profit? This into what is the proportion of cash received? 20 million out of how much million work done? But work done so far is 30 million. Okay. So cash received, I mean, only 20 million means based on the proportionate value, we will take it. Clear? Contract value divided by total contract completed, total contract value into estimated total profit into what? The proportionate cash received to the current work done. This much of profit will be taken to P&L. So how much of profit? 30 by 80 into 15 into 20 by 30.
So let's take with 3 by 8. It will be easily.
3 points. It will be recognized in income statement. Take up this. This third method is rarely used. So unless otherwise there is specified in the exam, IMA exam, that there is a contingency or there is a problem in recovering cash, then follow this method. So if they use the word based on proportionate cost of completion, then go for the first one. This is what is widely tested in IMA. If they tell you based on the percentage of value of work done or percentage completion method, go for the second one. And if they specifically give that there is a problem in recovering the cash, go for which one? The third one. Have you taken up? Shall we? This is what we solved now, right? Now let me add some additional cases in this. Let's assume the cost of work done is 35 million. Okay, estimated additional cost is
40.
40 million. Value of work done is 30 million. Value of work done is how much? 35 million. And you can look at cost up to date and value of work done up to date.
It's more than
We have done cost 35 million and value of work done is how much? 35 million. Here, no profit will be recognized. Cost of work done. Much? 35 million. And the value of work done. Work worth 30 million is complete by spending how much? 35 million means a loss of how much? 5 million will be recognized. Because prudence is the base. Prudence means provide for all losses. Provide for all losses. A loss of 5 million will be recognized. Have we taken up this third also? No, wait. Let me go for case 3. Okay. Cost up to date is 25 million. Okay. Estimated additional cost is, let's assume, 80 million. Okay. For a change, 82 million. Not 82, 62 million. Work done up to the rate is 30 million. See, at present it will appear like there is a profit. Case 3. What is the value of work done?
20.
Value worth 30 million. What is the cost work done? 25 million. It will appear like a profit of how much? 5 million. Okay, but can you recognize this in P&L account? Can you recognize this in P&L account? If I do the same working, here also, what is the current cost? 25 million. What is the estimated cost to complete? 62 million. What is the estimated total cost?
87.
87 million. But contract revenue is only 80 million, means estimated total loss comes. Estimated total loss of how many million? 7 million comes. So simple. Don't compare this and decide there's a profit or loss. Then in this case, we consider which one? Estimated for future also. Estimated for future also. Then in this case, provision for loss. A provision for loss of how much million will be created? 7 million will be created. Now you would have asked, the same question will come. Sir, why are you not doing for case 2? Why are you not doing this for case 2? Pay attention. What is the current cost? Please keep it in mute. Someone is on mute. Please keep it in mute. Coming back, why are you not doing this exercise for this case 2? The doubt will come. What is the value of work? 35 million. What is the cost of work? The value of work is 30 million. Cost of work is how much? 35 million. What is the loss? 5 million now itself. I said you charge it in which account? Recognize in income statement. Why are we not doing this? Why are we not doing this? Wait. Current cost how much million? Current cost how much million? 35 million. Estimated additional cost to complete in case 2? 40 million. Total cost is 75 million. Contract was, this one is 80 million, means estimated total profit will come in the future.
Yeah.
How much million?
5.
5 million. Wait. Why can't I recognize this in income statement? Why can't I recognize this in income statement? Is it a current period profit or future period profit? Future period profit. Current period, there is a loss of how much? 5 million. Recognize in income statement. Again, it is against conservatism or prudence. Do not record anticipated profit. Sir, current period there is a loss, recognize it, that's all. In future the profit will come, when it comes you recognize it. So don't recognize based on estimated profit. Otherwise, don't record anticipated profit. Don't record anticipated profit but recognize loss. Next, case 3, don't record profit. Don't record profit if there is a foreseeable loss. Don't record profit if there is a foreseeable loss. Provide for all losses. At the end of the day, when the contract is over, we estimated loss of how much? 7 million. A provision of how much will be created? 7 million will be created. This is for which one? Case 3. Wait, I'll go for case 4. Current cost, it is 32 million. Much? 32 million. Estimated further cost is 53 million. Value of work done is 30 million. This is for case 4. What is the value of work done? 30 million. What is the cost of work done? 32 million. 32 million. So current loss, how much million? 10. Current cost is 32 million. Estimated additional cost, how much is given? Estimated additional cost, how much is given? 53 million. Estimated total cost? 85 million. Contract is this one. So estimated total loss is how much? 5 million. Now what to do? Current also there is a loss. Total also there is a loss. So in the income statement, current loss. Current loss, how much will be reported? 2 million will be reported. Estimated loss. Estimated loss, how much? 3 million, for which provision will be created. Total, how much? 5 million. Or you can call it as provision for loss. Clear? Total loss is 5 million. In that, how much is recognized in the current period? 2 million. Provision for loss like that, we will create what? 3 million. In which one? Income statement. This is case number 4. So these are the 4 cases. Any one of the case can be tested in exam also with losses. Case 1 already we have done. This one already we have done. This one already we have done by how many methods?
3.
Based on proportionate cost, based on value of work done. If there is a problem in recovering cash also we have done. Case 1 is a profitable situation. Now I request you to take up this case 2, case 3, case 4 and take up the solution also. Profit, ignore. Case 3, current period there may be a profit. Current period there may be a profit. But on the completion, we expect a loss of 7 million. in IMA, they can club this with the deferred tax accounting and they can ask you questions. Okay, we'll see. Next, we are going to see that. Have you taken up case 2, case 3?
Yes.
Current loss of 2 million is created out of total loss of how much? 5 million, which means a provision for loss, how much million should be created? 3 million. So why do you provide? Prudence. Otherwise, conservatism. Now comes, we will learn how to recognize this. We have, I mean, in this particular question, we calculated income for 1 year or 4 years or 3 years, only for first year. Okay. How to work out for 3 or 4 years, we will see in the next question. Because in IMA, they test that particular thing also. How much of profit or loss for first year or second year or third year, like that. Take up this. Take up this question along with me. Now we have to work out, listen, in accounting we follow which method? Proportionate completion method. In tax they follow which one? Cost to completion. So amount of profit recognized will be different. Okay, let me do work out. For accounting record purpose. And which one? Tax code. In US they call it as tax code. Not tax law, tax code. Pay attention. First year. What is the current cost? What is the current cost? 40 million. Estimated additional cost 140 million. Estimated total cost 180 million. What is the contract value? 200 million contract value. What is the estimated total profit? 20 million. So this is like a basic working. Thereafter, let us go for accounting record and tax code. In accounting record, how do we work out? Based on proportionate completion method. What do you mean by proportionate completion method? How do you work out based on proportionate completion method? Okay. Work completed divided by contract price or total contract value into estimated total profit. So what is the work completed? Work completed 50 million out of 200 million into what is estimated total profit? 20 million. 5 million will be transferred to P&L. First year, what is the profit to be recognized? 5 million. For which purpose? Accounting record. But tax code is not following this. Tax code, they go by their own method. What is the tax code method? They go by current cost divided by estimated total cost. Estimated total cost into estimated total profit. So what is the current cost? 40 million divided by estimated total cost 180 million. This into estimated total profit 20 million. In accounting, we recognize 5 million. In tax, they recognize how much? 4.44 million. This is at the end of which year? First year. Okay. Like this, we have to work out for which year? Second year, third year, they would have recognized. Third year, they would have recognized what? Full profit. They can give a base question like this and they can ask you how much of profit will be recognized in first year, either for accounting record or for which one? Tax code. Like that for second year, accounting record, tax code. Third year for accounting record and which one? Tax code, they may ask you. So 6 type of questions possible from this. First year end, accounting or tax. Second year end, accounting or tax. Third year end, accounting or tax. This is the base information. Based on this, they can ask you what? 6 questions. And again, in IMA exams, 4 students are sitting in the system with the system like system 1, 2, 3, 4. Student 1 will get a question based on what? First year accounting record. Student 2 will get based on tax code or second year or third year like that. So same question will be there, but what is asked will be different. And numbers also will change. Any doubt in this? Please remember, first year end, what is the profit recognized? 5 million and what? 4.44 million. Second year, you have to be very careful. Try to do the working. Second year, you can try to do the workings.
Profit will be carried forward.
We'll see. Cumulative profit. Second year, we'll work out which one. Cumulative profit minus what is transferred in first year, balance you will take it in second year. We'll see. Let us work out cumulative profit. Have we copied this? Have we copied at the end of first year? At the end of second year, current cost means cost incurred in the first year plus second year. Cost incurred in the first year plus second year. Total 90. Estimated additional cost at the end of each year is given. At the end of each year, which means this is the cost for the third year. So it will be totally 190. What is the total contract value? 200 means what is the estimated total profit? 10. So work completed divided by contract value into estimated total profit. What is the work completed in the second year in? 130. Cumulative value, they have given us what? Cumulative value means don't add 50 plus 130. Don't add 50 plus 130. Second year, cumulative value is how much? 130. So 130 out of 200 into 130 out of 200 into 10. How much it will come? $6.5 million. Wait. 6.5 million less in the first year already we recognized how much? 5 million. Balance, how much will be recognized? 1.5 million will be recognized. So 6.5 million less 5 million already recognized in the first year, balance 1.5 million. When you go for the other one, it will be like 90 divided by 190 into 20. 10. How much it comes? 4.74 million. Less first year, how much is recognized? 4.44 million. So balance, how much you would recognize? 0.03 million or 0.3 million. Clear? This is not a profit of the second year. 6.5 is the profit of which year? Total accumulated profit of first and second year. In this much has been recognized. Balance, you recognize it. Copy this. Third year is simple to work out. Second year is difficult. Third year is simple to work out. Total cost, we know actual. First year plus second year plus third year. What is the total cost? 40 plus 50 plus 60. 40 plus 50 plus 60 over 150 million. Okay, that's no additional cost. Work is over. So contract value 200. So total actual profit 50 million. For tax or accounts, it's going to be how much million? 50 million. Okay. Now let me do work out for tax, accounting record purpose and tax record purpose. First year, second year, third year. Accounting record purpose, how much we recognized? 5 million. Second year, 1.5 million. What is the total? 50 million. Balance will be recognized in third year. 43.5 million will be recognized in which year? Third year. For tax purpose, same. Total will be 50 million. Total will be 50 million. First year different. 4.44 million. Second year 0.3 million. Third year balance. 50 minus 4.44 minus 45.26 in the third year. Now wait, the profit recognized in accounts and tax are same or different? Profit recognized in accounting and tax, are they same or are they different? They are different. So we know when there is a difference in profit, we have to create deferred tax. We have to create which one? Deferred tax. That we have learned in the last class. How to create deferred tax. How to create which one? Deferred tax we learned in the last class. Now can someone of you recollect and tell me, first year will there be a deferred tax liability or asset? Accounting profit is more than taxable profit. Last class report. Rules எல்லாம் கொடுத்து work எல்லாம் பண்ணிருக்கோம், அதெல்லாம் மறந்துடாதீங்க. Look at this. When accounting profit is more than taxable profit, we create which one? Deferred tax liability. When accounting profit is more than taxable profit, we create what? Deferred tax liability. Deferred tax liability, the difference 0.56 into tax rate we have to multiply. Tax rate is not given. Suppose if they would have given, you would have multiplied with tax rate. Wait. How much? 0.56 million. 0.56 million into tax rate you would have multiplied. That is for first year. Second year also, accounting profit is more than which profit? Taxable profit. You will create a deferred tax liability of the difference. What is the difference? 1.5, 0.3. What is the difference? 1.2. 1.2 million. 1.2 million into tax rate you would have multiplied. Third year, don't create deferred tax asset. We will close the deferred tax liability. We will close which one? Deferred tax liability. This also we have done through a depreciation example. Last class பண்ணிருக்கோம், depreciation example ஓட பண்ணிருக்கோம். For example, first year we would have created a deferred tax liability. Second year we would have closed deferred tax liability. Third year we would have closed. அந்த மாதிரி close பண்ணிருக்கோம் because of timing difference. Second, third, fourth year we would have closed. Same way here. Third year you can find the timing difference would have been over. Difference பாருங்க.
Yes, almost
4.3, 45, sorry, 43.5, 43.26. So reversal of deferred tax liability.
so 2.
1.764.
Yeah,
Otherwise, first year what is the deferred tax liability created? 0.56. At the second year, what is it created? 1.2 million. And the timing difference got over in the third year. Timing difference got over in which year? Third year, 1.75 million of deferred tax liability will be closed. So first year you create DTL, second year you create DTL, third year DTL will be closed. So sometimes they can give you a question with tax rate. They can give this question with, they may give you tax rate. Let's assume 40%. Then the question may be based on DTL also. We may think that it is based on profit. It is based on profit. It is based on which one? DTL. Then what you have to do is, you have to work out for first year, second year and which one? Third year. Then come to this final working. First year we create DTL. Second year we create which one? DTL. Third year we close what? DTL. Then options will be given like A. DTL of 0.56 and 1.2 million is created in the first year and that is closed in the third year. Option 2 will be like DTL of, they will give you different options. You have to choose the correct option. So one MCQ will they ask this much, they may ask this much. Which means we have to do working for which year? First year, calculate accounting profit and which profit? Tax code profit. Then do working for which year? Second year, work out accounting profit and tax code profit. do for third year, work out the actual profit, then find out which one, DTL how much is created, DTA how much is created, like that. They may ask you questions. It's a fantastic question. Based on this, there are three things. Number one, accounting profit differs from which profit? Tax profit, number one. Number two, we can recognize income for long-term contract either based on which one? Percentage completion method, or which one? Proportionate cost of completion. And the accounting profit and taxable profits are different. Because of that, what is created?
Tax.
Deferred tax liability is created, and that is reversed. The timing difference is over now. The deferred tax liability will be what? Reversed. So it's a combination of two chapters that is tested in one. So this is accounting for contract, that is long-term contract with customers.